Hi everyone, this is Jordan at PureElliottWave.com here for your weekly analysis on the Eurodollar for the week ending May 5th, 2023. This week, price remained mostly flat and did not make a new high over the past weekly candle, so we're still expecting a pullback down to a target zone of 1.02862 to 0.99505. And then after that, we're expecting more upward momentum. Both the primary wave count is still intact, expecting that deeper retracement, and the alternate as well remains the same as last week with a shorter term pullback and then more upward movement. Before we get into the charts, just one quick reminder. Last week will be our last free analysis of the Eurodollar, and then after that we'll be launching the full product, which you can sign up for using the link below to receive a special discounted rate. You'll get a daily report such as this one, where we're going to go over the Eurodollar 5 days a week, and we'll bold anything new as you see here. So anything new for the day gets bolded, so it's nice and easy to read. Nice and big charts for you to look through. And then every Friday we'll do a video just like this one with me, and I'll let you know what my orders are, my positions in the Eurodollar moving forward. As of now, I don't currently have a position, but I'm making some plans to get one in the near future. So without further ado, let's jump into the weekly chart here. On the weekly chart, you can see the long-term bottom ending in September 22, going into a motive structure to the upside here. I do want to address a question I had on the last video, which would be, why can this structure here not be 1, 2, 3, and then this be the fourth wave down, ending in a fifth wave shortly, expecting more momentum upwards to continue? And I believe we have 3 reasons to believe this intermediate wave. 1 is complete as a singular impulse. The first reason is that the third of a third wave, which is very obviously this huge green candlestick here, fits best this way. If this were a 1, 2, 3 impulse to the upside, then we'd have to decide which wave between 1 and 3 are going to get this ginormous green candlestick. And if we had 1 have this ginormous green candlestick in it, then that would leave wave 3 to have a lot of overlap in this area with these highs and lows. Or if wave 1 was complete and wave 3 had this ginormous green candlestick in it, then this overlapping at the top wouldn't count very well for an impulse structure, because whenever you have this overlap between this wave and this wave, then you need another 1 and 2 before it. So I believe the wave fits better with the third of a third sitting here, instead of trying to divide this price action and this price action, either a 1 or a 3 impulse. The next reason is that the trend line for this structure is very clean to the upside if we do apply that, and then another trend line here can easily be seen. So this downward movement right here obviously intersected this upward trend line, and then the subsequent price action was very, very choppy in this area, characteristic of a corrective structure, and especially a B wave as well. It would be extremely hard to get this overlapping structure and this diagonal overlapping structure to fit in anything other than a B wave. And the last reason I have for intermediate 1 being complete here is that even if this were intermediate 3 or minor 3 with a 4, 5 to the upside, both of the counts would still expect a pullback shortly. So if for some reason this count was wrong, then we would still be expecting a wave 2 to the downside, with that structure being a 1, 2, 3, potentially 4, 5, and then we'd have a completed intermediate 1 going down into intermediate 2. So both of them would require a pullback for intermediate 2. The invalidation for the current count sits at 0.95364, where no wave may move beyond the start of 1 in an impulse. We have a target for intermediate 2 based off intermediate 1 to reach the Fibonacci 618 extension, which fits well with our A, B, C expanding flat to the downside. I'd like to see this best fit channel be breached on a closing basis for confidence in that downward movement. On the daily chart, we're going to pick up from the top of intermediate 1 going into the A, B, C for intermediate 2. On the daily chart, you can see coming off of intermediate 1, our A, B, C structure, and within B, we had an expanding flat A, B, C, with C being a ending contracting diagonal. The invalidation for that structure is 1.1271, and that is where wave 5 would be longer than wave 3, so a little ways off now. Minor C may be unfolding downwards and must subdivide as a motive structure comprised of 1, 2, 3, 4, 5 at minute degree, and within minute 1, minuet 1 may be complete, with minute 2 also complete, and then the recent days we'll see that in a little bit more detail on the hourly chart. Price has still not breached the best fit channel encompassing the upward price movement from the past month and a half. I'd like to see this breached on a closing basis, and a really good signal would be if we had a daily candle down here below and not touching that channel. You can also see a target for minor C. We had the previous 618 retracement of intermediate 1, and then we also have another target, which is the 618 extension of minor 1. That's a 1.618 extension, where within an expanding flat, minor C often retraces that ratio with minor A. On the hourly chart, we're going to pick up from the top of minuet 2 here. Here is the top of minuet 2 as pointed out on the daily chart. Previously, we had an A, B, C structure for minuet 2, with this wave being a very obvious impulsive structure. You could subdivide it in a few ways, but I've chosen this simpler way of labeling now because I don't want too many labels on here because it's very compounded to the upside. Since the start of trading on May 4th, we have had a lot of overlapping price action downwards, and we can see two choices right now. We can either see an extending wave downwards, which would be minuet 3 being comprised of sub-minuet 1, 2, 3, 4, 5, which is comprised of micro 1, 2, 3, 4, 5, and then inside of that we have sub-micro 1, 2, 3, 4, 5, and minuscule 1, 2, 3, 4, 5. So a ton of overlap here. Another possible structure for this overlap could be a partially complete diagonal, which this could potentially be wave 1 in a diagonal and 2, and then we'd have to see what the price action in the next week looks like, but that would be a diagonal in the very early stages. Short-term invalidation for both of those motive structures to the downside would be the top of minuet 2 at 1.10914. Now let's take a look at the alternate count that expects a shorter pullback and then more price action to the upside. The weekly alternate chart right now gives a larger scale look at what we suspect could be a end to intermediate 1 and 2, with intermediate 3 unfolding upwards. If this were true, then within intermediate 3, minor 1 and 2 would have a much shallower pullback than the current count, which was A, B, C, expanding flat, which would end potentially in this area. So a much shallower pullback, although both are expecting a pullback shortly. Invalidation for this count to the downside is 1.05169, where no wave may move beyond the start of minor wave 1. On the daily chart, let's pick up at the top of intermediate 1 and look at this price movement in this area. Here we have that top of intermediate 1 and A, B, C for intermediate 2. Currently, we've completed minor 1 to the upside and going into minor 2. This could subdivide as any corrective structure except a triangle, so we need to keep our eyes open and be open to the possibilities of a potential flat, a zigzag, which is common in this structure, a combination, or even double and triple combinations. A target's calculated for intermediate 3 to reach the 1.618 extension of intermediate 1 and measuring that off of intermediate 2 at 1.29378. On the hourly chart, we'll take off from the top of minuet 2 right here. Here's the top of minuet 2 as mentioned before, and these charts are identical to the main hourly chart. We currently have that overlapping 1, 2, 1, 2, 1, 2. In the short-term invalidation, the same above at 1.10914. Right now, I'm going to assume the A, B, C structure down for 2 may complete as a zigzag, but we're going to be open to the possibilities of other corrective structures as price moves forward over the next coming weeks. Currently, we have 1 and 2 at minuet degree complete and minuet 3 extending downwards with multiple impulses inside of it. The short-term invalidation for that is just above, and the target for minor 2 is for that to reach the 618 retracement level of minor 1 at 1.07376. For the weekly volume data, in the short term, we have a moderate increase, long term, a long-term decline. Week over week, volume looks about the same, and with the doji candle and no bullish progress, I would say this volume looks slightly bearish because volume is increasing with no increase to price. Money flow is neutral and unbalanced volume is still within this technically weak range. On the other weekly technicals, you can see resistance sits above at 1.117. Last week we had a shooting star, and then this week we had a spinning top doji. Shooting star is a potential reversal pattern, and a spinning top doji is a signal of indecision. The outlook starts to get more bearish when we look at ADX, which has just reached extreme, with the ADX line over both the positive and the negative DX lines, and upward sloping. RSI is still neutral, stochastics are overbought, and ATR is decreasing with an increasing price, which has me doubting any more explosive upward price movement with the decreasing ATR. Support is thin until we reach 1.050 and 1.030, and this is the 200-day moving average. It is upward sloping. This weekly chart looks bearish. This is the daily volume data for the euro dollar. You can see our most recent strong volume was actually on down days, which is bearish. Price overall was flat and volume slightly increasing, which supports the Elliott wave count, expecting downward movement and the bears to take control. Money flow is neutral. Unbalanced volume, you can see we actually did break this line just a little, but it was quickly reversed and moved back up into the channel. Still, we're looking for a clean break of this purple line, and that would be a bearish signal. This range is significant because it is moderately flat with about 5 to 6 tests along the purple line. For our other daily technicals, you can see on the candlesticks we have had multiple reversal patterns with the dark cloud cover, bearish engulfing last week, and this week we have another dark cloud cover for May 4th. This is a strong indicator that a shift may be happening from that upward trend. Moving averages are bullish. As we saw on the weekly, the 200-day was sloping upwards. The 50-day is also sloping upwards over the 200, and the 13 is sloping upwards over the 50. ADX is still indicating an extreme upward trend and is starting to flatten out over the past day or two. RSI is neutral with some long-term slight bearish divergence. You can see RSI had a high here, and then it had a higher high here, but RSI made a low, which is slightly bearish because of the time between the two tops. Stochastics are neutral and ATR overall declining with an increasing price. This chart is bearish, and the only bullish signal currently is the moving averages being upward sloping, but they are lagging indicators. So this chart, the weekly and the daily technicals do support the Elliott wave count. That's all from me. Hope you all have a good rest of your weekend.